The cool thing about trading is you can move as quickly or as slowly as you want. Most things that you do in life, you're on somebody else's schedule. So you're doing things when they say you should, when they recommend it, or you're not doing things because they say you should not, or you just downright don't have permission. The only thing limiting you in trading is the knowledge and the confidence. And with that being said, I'm going to show you guys this paper trader before I get into the meat and potatoes of this video. But paper trading, paper trading, paper trading, paper trading. I might even change the channel name to paper trading. This is the holy grail for those hands-on DIY learners out there. For the people that want to just, get started, come into any paper trader. This is the one I use. Type in Walmart. Okay, that's not Walmart. Type in Walmart. It gets crazy trying to remember the tickers. Type in, I don't know, what y'all think, Pinterest. Oh, yeah, or type in ATT, whatever you want here. Apple, there it is. Type in whatever you want into this paper trader and get comfortable. Get comfortable making trades, get comfortable learning the software, and then go from there. The only thing stopping you from getting started is just having the confidence and having the knowledge and having enough practice. You got to put up some shots, and this is the gym. The paper trading is the gym. You get in here and it literally mirrors the actual market. So if you want to say I'm going to put in $1,000, then trade with $1,000 or $100 or $50 in the paper trader and see what happens. Now, go to trading view here, and I want to say that if you lose money in the market, it's not the market. It is either your setup, it is your entry. The entry is simply when you decided to hit submit on the trade. So if you're buying contracts, when you hit submit, that is your entry. So it's, it is important, but it's not the end all be all. Again, I swing trade, so sometimes I can have a kind of a rocky entry, and I buy myself time. Time is everything. I buy myself time. I value time over speed right now, and sometimes time allows me to not be as accurate, but at some point, and we'll get into my personal swing trade strategy in a different video, but today I just want to talk about why most people, when they first start off, they might lose trades, and it's just a part of it. It's just a part of it, and people don't like that. People don't like to say that. Other people online will tell you it's butterflies and unicorns all day long, and though it can be lots of that, it doesn't come without a little bit of risk and kind of putting your hand on the stove and figuring out it's a little too hot. So one of my biggest problems early on was overtrading. I started off day trading, very excited, big buzz on, hey, I'm in the market. Hey. I paper traded like maybe 3 or 4 trades, felt good, went in, day traded, was successful, and I don't trade for a dollar amount, I trade for a percentage. So I don't trade to try to make $50, I trade the percentage of my account. So if I want to make $50 and that happens to be 30-40% profit, then that's how I trade. But again, what happens when I was day trading, and that's when I first learned about overtrading, I actually almost got flagged as a pattern day trader, and that just means you're doing too much. Actually, yeah, just doing too much, and not being patient, overtrading, and that can burn you, because if you've traded into a position, if you've taken a stance, so to speak, and the market changes or flips on you suddenly, you're stuck. You're dead where you stand, so. And especially with day trading. Swing trading, you have a little bit more, again, just time. I don't want to say flexibility. I don't want to say anything like that. You just have more time. So you can still be wrong and not know you're wrong for 2 weeks. So to each his own on that. Another thing I want to talk about is chasing a move. So chasing a move looks like this. Let's go to countries. And I like TradingView because you can look at, what market you're looking at. But I don't trade on TradingView. Maybe I will one day. But countries, you can go entire world. Let's look at the entire world. No, that's going to be a lot. Let's go back in here into the markets. Let's go to the United States. Let's see, my time getting, yeah, so, alright, for example, this is, let's just take, let's just go, we can click any of these and I can show you an example of what chasing means. So, let's go to Tesla. Everybody knows Tesla. I feel like that's whatever you think about it is whatever. But, alright, so, let's see, full chart. Bear with me. So, chasing a move in this scenario, okay, it's literally what it sounds like. So, let's take right here, for example, and you see that on this chart you've got a nice red candle here, a red candle here that's losing volume, another red candle here, okay, and then you see this large green candle, okay, with lots of momentum, right? So you're in this green candle. The ideal part to get in, obviously, is at the bottom of the green candle. Not up here, but I mean, according to this chart, you can actually still kind of ride this up a little bit. The problem is, once you get into this last candle and into this candle that eventually prints red, if you are trying to enter in any of these spots, you are chasing a move that's already run out of steam. And sometimes, in swing trading, you have a chance to let the move reverse. But sometimes day trading is unforgiving. So if you're going to do day trading, definitely learn how to day trade. And I can give a little bit of help on that if you come back to the video. But yeah, you don't want to try to get in at the top or the very bottom of a move unless you know, like, especially at the top of a move, because it depends on your position. If you are trying to do a call and you do a call, which means it's going up in your position, and you jump into a call here because it's been going up, right? It's been going up. If it's a call and it's a small, day trade call, you're about to lose every dollar of that as it goes down. So chasing a move, you want to kind of try to get into the middle or the meat of a move. It's a trend, of course, but trends, they die. So at some point the trend ends, and there's all kinds of metrics they use for that, and people use to predict that, especially when you start zooming out and looking at trends over the last month or so. So you can use these different intervals down here. Day traders usually use nothing more than 3 days, and then for sure down to the day, and then even further down to the minute of the day, and to get very, very up to minute action. But swing traders, you can look as long as you want, especially if you're going to swing for something 3-6 months out. You can just follow the news and make your entry and take it from there. But the main thing is, if a move is already finished and run out of steam, you don't want to be chasing the move as it's coming down, and you don't want to be chasing the end of momentum. And that's one of the fastest ways to lose money. So we got over trading. That's just doing too much. That's, maybe you're trying to pinch the market, trade at the top, trade at the bottom. Maybe you're trading, you make a little bit of money, and you trade again, make a little bit of money, and then you trade again, you lose money. Anything that's just not giving yourself an opportunity to really study the data and see the picture forming. Anything that's overextending you, that's overtrading. And then chasing is pretty similar to that, but you can chase anything. You can do your first trade and it be a chase. You can jump in, and that's why I say paper trading is everything, because it gives you Now, nothing is going to give you the emotions of a real trade, but paper trading can give you the numbers, and it can give you the data, and it can give you the, it can give you the risk reward. It can give you a lot of that without you burning your pockets. So those are the two major ones that I wanted to talk about. But just a little tidbit is like the last little, I guess this is the key point, golden nugget. I gave you two golden nuggets, so we'll call this one a silver. But not understanding your risk or your risk tolerance, not understanding how much of your account you want to risk on a specific trade or a bundle of trades. That is very, very important, because you need to know, like, is this going to wipe me out? Is it going to burn me bad enough to not want to do this anymore? Is it going to, am I going to feel awful about this? And again, paper trading kind of, I'm not going to say it's going to mitigate that, but it'll give you just more exposure. So those are my big three tips. I hope they help. If you have anything to add, any kind of questions, any kind of comments, just jump in the comment section. And I'd love to see some dialogue going on down there. But I'm going to hop out of here, and we'll catch you next time. Monday is coming up, so going to be up bright and early. Next video will be up soon. Go click around on my channel. I got more. Peace.